Good morning, everybody. Tom Jones here from P6 Biz Advisors. Now, if you're a business owner and you've ever thought sales are up, but my cash still feels tighter. I'm making money, but I don't feel in control. I only hear from my accountant when something is due, then you're in the right place. Because most business owners don't have an accounting problem. They have a visibility and support problem. So last week we covered the first 5 gaps: accuracy, value, timeliness, communication, and trust. If part 1 was about clean numbers and clean communication, today is about depth and direction. The stuff that hits: taxes, compliance, growth. Here's what I want you to walk away with today: a quick test for each of these 5 gaps, 1 simple fix, and 1 thing to measure. What I want you to do is don't try to fix all 5. Again, so this isn't so you're driving looking forward instead of looking in that rearview mirror. You want to be proactive instead of that reactive. And as you know, I'm not here to bash anybody. Everybody in the accounting business is a good person. They're busy, they get, things happen. But what really happens is businesses outgrow the level of support they started with. You signed up with somebody, you said, here's what I need, and your business has grown, their business has grown, and you've never had that re-engagement as to what you actually need. That's what this is about as well. Just so you know, it's exactly what my top level service at P6 Builders is built for. Top stands for top owner priority. We don't just do the books. We close the month on time, track key numbers, give you KPIs, give you charts, and give you real-time support. So you're not waiting weeks for answers while you stress and guess on cash flow or profit. If you want my 1-page, 5 deeper gaps and fixes checklist for part 2, just send me a direct message with the word depth and I will reply to it. Again, that's for the 1-page, 5 deeper gaps and fixes for part 2. If your situation is more private and you want to talk about this more in depth, I offer a free 30-minute proactive cash flow and profit strategy session. We'll talk about we'll look at things. We'll talk about your cash flow, your profit, where your big issues are, what you think your issues are. I'll give you some advice. It's a free 30-minute session. We'll put the link in the discussion area. All right, let's jump in. Gap number 6, people are weak in specialized areas. What does that mean? In payroll, sales tax, multi-states, compliance. This is where things can get expensive fast. There are areas that you cannot afford to go wrong on. Quick question for you: do payroll, sales tax, or compliance ever become a last-minute scramble for you? Does it? What happens? I've seen payroll filings delay that cost employees real money, deductions handled incorrectly, compliance mistakes that trigger penalties that could have been avoided. Now, here's the thing. Not every accountant is built to handle complexity, and that's okay. They know what they can do. The problem is when they don't admit they can't do it. I'll admit, sales tax, I know how to file forms, but the actual what needs to get filed where and, how to actually multi-state compliance, I'll be the first to admit you need a specialized person for that. I'm not going to lie. I'm just going to tell you, if I can't do it, I'm going to help you find somebody that can get it done so that you don't have those problems. Now, why does this hit a cash flow? Because penalties, interest, notice, and stress. And then you got months of cleanup, which causes more stress. Here's a quick tweak for you. Ask for a 1-page compliance calendar that shows you what gets filed, when it is due, and who owns it. So you've got a thing that says each month, here's when it's due and who's going to file it or who you need to talk to get it filed. If you can't get that, it's kind of a little bit of a red flag. Even if they don't have it offhand, they should be able to give it to you. They should be able to make one up for you really quick. Here's a little question. If I ask you right now, do you know what's due this month and who's handling it? Would you say yes or no, or would you hesitate? How do you measure that compliance issue? How many penalties or compliance notices did you get in the last 12 months? If it is more than 0, the gap is costing you. Gap number 7, not understanding how your business really works. This one is subtle. It's kind of coming back to, you started out this way, your accountant was here, both of you are growing. Have they kept up on understanding how you've changed your business or how it actually runs? If they don't know how it runs, the advice they do give you will miss the mark. If they've never seen how you bill, collect, or deliver, they are guessing. And when somebody guesses, you can look profitable on paper, but be broke in real life. Here's a quick question for you. Are your pricing and hiring decisions based on numbers or just your gut feel? Just think about it. Now, why does this hit cash flow? When advice is wrong, you make wrong decisions. Your pricing may stay too low. Labor gets out of control. Overhead costs creep up and you grow the wrong things. Instead of growing this product, you should have grown this product because you got better margins or it's just a better product for you. Here's a quick tweak for you. Meet with your advisor at least once a year. Tell them how you sell items, how you bill your items, how you collect, how you deliver, where money gets stuck, where you have other issues. That way your advisor can actually understand what's going on and advise you better. That meeting alone can change everything with your relationship with people. That's just once a year. My top level service, we actually meet at least talk once a month. Another quick question for you here. If your accountant had to explain how you make money in 30 seconds, could they do it? Again, just think about it. How do you measure this? Pick one simple scorecard metric or KPI: profit per job, profit per customer, Profit per service line. So if you're a service company and you track your sales by different items, what's your profit per service line? If you cannot answer that quickly, the understanding gap is usually the reason. I mean, those are the things that you should be looking at in your monthly review. Gap number 8, tax surprises and missed savings. This one usually hurts because it shows up as a surprise, a bigger tax bill than you expected. Or why didn't we do that moment after it is too late? Why didn't we do this deduction and it's too late to do it? Owners find out later that they were deductions they never took, strategies that were never discussed, and classifications that were handled wrong. Again, I like to tell people that there's no such thing as a tax season. You should be doing tax work all year long, which is the difference between tax planning and tax preparation. Tax planning, you're talking all the time. Tax preparation is you just give the forms to the preparer, they get the tax return done so that it gets filed with the IRS and that you don't get any notices for an unfiled tax return. Now, again, it's not because anything illegal happened. It's because nobody was looking forward. They were always looking in that rearview mirror. They need to be proactive, looking forward. Here's the truth. Like I just said, tax strategy doesn't happen in March and April. That's filing season. It happens throughout the whole year. You should be discussing questions. Should I be in salary, or is my salary reasonable compensation based on the IRS's view? Are you using depreciation correctly? Do I qualify for Section 179? Does this item qualify for Section 179? These are not tax time questions. These are year-round decisions that you should be making, helping to run your business. Why does this hit cash flow? Because taxes are probably the biggest check you write all year long, whether it be payroll taxes or income taxes. If nobody's planning ahead, you end up paying more than you should, and then you start wondering, why is cash flow tight? Well, all of a sudden you got this unexpected bill. Have you ever opened a tax bill and thought, I wish I knew this sooner? Quick tweak, schedule 2 tax planning checkpoints each year. One after your tax return is done, so you can start the planning for that next year. And then again in quarter 3, because 6 months after your tax return is done, things are going to change. Or the other option is to do quarter 2 and do the beginning of quarter 4, so you still have time in quarter 4 to make changes. Not complicated, just consistent. Boom, 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 boom. Again, I ask, is the only tax conversation that you as a business owner are having is when you sign the return? Or are you talking strategy before the year is over? How do you measure that? You ask yourself, did I have a tax surprise last year? If yes, you have not done real planning, you had reporting, just like we talked about. Gap number 9, again, reactive compliance and fire drill deadlines. This is where owners feel like they're always putting out fires, late filings, last minute requests, deadlines that feel like a panic situation every time. Even when the issue is small, the impact on the owner is big. I keep hearing owners saying things like, why does this take days to get an answer? Or I'm still not sure if that was filed. The uncertainty is exhausting. Do your deadlines feel like calm or fire most months? Kind of goes back to that last quick tweak. If you had your checklist of what to do every month, it should be calm. If not, then it's going to feel like a fire drill. Why does this affect cash flow? Delays create penalties. It's cash out of your pocket. Extra accounting fees because we had to figure out what happened. Wasted time for both of you because you had to clean up things. They had to clean up things. You missed opportunities because now you're worried about this tax bill, getting that cleaned up. And it ends up being a constant distraction that you think about. So here's a quick tweak for you. Agree on response time and deadlines up front. Could be even simple standards like same day or next business day response, or we close the prior month by the 10th business day. We confirm filings as they're submitted. Again, kind of coming back to do your deadlines feel calm or do they feel like a fire drill every time? Here's how you can measure it. How long does it take to get a real answer to a key question? Now, again, remember, this is going to be the agreement between you and your advisor. You can't just think that because you ask them, they're going to ask a question. Well, if you're only a tax preparation client, that's all the advisor was expecting from you. If you have a different engagement where you want to engage with them all year long, that's where you would put that into your engagement to say, how long will it take for me to get an answer? It's a preparation client. If you ask it in the middle of summer, they could be on a 2-week vacation. You may not hear for 2 weeks. So again, make sure you have that understanding between you and your advisor, what your time is to get answers for your questions. If you have that agreement and you're still waiting a week, you're paying for that delay, which is going to affect cash flow. Okay, we're coming to the last gap here. Gap 10, no proactive advice or support. This is the most common long-term gap and the one that quietly costs the most. Many advisors, they do the work they're asked. We filed your tax return. We prepared your financial statements. We did your payroll tax filings. We did your sales tax filings. But you don't have that agreement with them to think ahead. That's what I like to try to do with my top-level clients. In fact, that's what we do with our top-level clients. We're always looking ahead. We try to plan ahead. What's going to happen? What's happening? The way things are with your advisor right now, you're probably not having any budgeting conversations. You're not cash flow planning. You're not doing any KPIs. You're not getting any charts to show what's going on. No growth discussions. What happens then? You're reacting instead of preventing. Not only preventing, you're growing because you're actually proactively managing your business. Here's what this looks like. You want to hire, or you think you need to hire. Can you afford it? You do the analysis. You're worried about slow season, but you don't have a plan. You want to sell in 3 to 5 years, but you have no business. You have no idea what the business is worth. Good support / agreements. Remember, it's just an agreement. You can't just assume that these people are going to do this for you. Should help you see around these corners, not just clean up after the fact. Now flip that around. If you had the agreement with you and your advisor to get real-time support, what would that change for you, allowing you to have more steady cash flow? And again, remember, you got to have that agreement. You can't just assume that they're going to answer those questions for you. And here's one way to make all this real. Track your business value on purpose. Most business owners say they want freedom someday, but they do not measure their business or proactively manage their business to make it actually worth what it could be, or know what their problems areas are. A tool that we use that can not only help you with your business value, but identify the areas that your business is lacking is we use the value build. Again, I'm going to say it's a 10 to 15 minute quiz, but you will get so much valuable information because it's like a report card. You know, like when you were young and you got your report card, you got A's, B's, C's, D's, whatever, but you knew which class you were doing bad in. You knew which ones you were doing good in. That's what the Value Builder scorecard does. It shows you where you're strong, and it shows you the areas that you need to improve on to make your value of your company even better and to make you understand where, okay, I got to work on it here. Even if you're not selling soon, this matters because the things that raise the value of the business will also make your business run better now. Steadier cash flow, less owner dependence, better systems, a more consistent profit. Why does this help with cash flow and everything else? With this proactive support using Value Builder Score and your advisor, you manage the business. Without this proactive support, what are you doing now? You're managing by the bank balance. Because of that, your stress level goes up. And what are you dealing with? You're dealing with who's loudest in your ear that week because you want to get it out of that so that your stress levels go. It's not leadership, that's survival. Do you want to get a business that you're just surviving, or would you like a business that grows? Well, here's some quick tweaks you can do even without the Value Builder Score. Make sure your books get closed fast. Pick 5 to 8 key numbers that you need to look at every month, and then make 3 decisions based on those facts that will change your business and help it grow. That is how you move from reactive to in control. So as you make these decisions more and more, it's going to become easier and easier. Little question here is, do you get advice or do you just get reports? Remember, you can't just assume you're going to get the advice. You need to have that agreement in place so there's an understanding between you and your advisor what is going to be done every month or annually or quarterly. And here's how you measure that. How many proactive ideas did you get in the last month? If it is 0, you're buying reports and not support. And remember, that's what the advisor thinks that's all you want. If you want more, you need to tell the advisor you want more. And again, coming back to that Value Builder Score, do you know it? Yes or no? If you did not know it, you do not have a clear plan to improve business value. And if you want, in that 30-minute strategy session, we can actually do your Value Builder Score together. We can see the results and we can pick one item to help you improve in the next 30 days. Wouldn't that be a nice thing to have? Within 30 minutes, a score of where your business is at and one area to improve it. Let's do a little wrap up. What's the 10 gaps? Here's the top 10 accounting gaps. I'm just using 1 word for each one. If you can't remember last week's, go back and see the video. We have accuracy problems. We have value problems, timeliness, communication, and trust. Today we covered expertise, clarity, taxes, and I'm going to lump these 2 together. 9 and 10 are reactivity and proactivity. That's where you want to be looking forward instead of looking back at that rearview mirror. And again, it comes back to, what does your agreement say with your advisor? You can't just assume that they are going to give you that proactive advice. You need to have that agreement with them to say, this is what I'm expecting, so they know what to do instead of just giving you the reports that you thought. Here's the thing, when you look at all those 10 gaps together, it's not an accounting problem. Everything's reported, done everything correctly. It's a support and visibility problem, or even an understanding problem because you didn't have that agreement between yourself and your advisor as to what needs to be done. When you fix this, it's going to impact everything. Your cash flow, your profit, your tax planning, your hiring decisions, your growth plans, and your business value for when you want to sell the company. This is exactly why I built the P6 Builders around the 6 pillars. Because when your foundation is solid, growth becomes possible. And yes, with this right foundation, you can actually grow your business up to 10 times in 3 years without the chaos you're having now, without the stress you're having now, because you're making decisions with clarity. Again, you're making clarity because you're measuring all these items, which allows you to manage them instead of just reacting or who's the loudest in my ear that day. None of that anymore. One last question for you to think about. On a scale of 1 to 10, how important is getting real-time accounting / tax / value support right now? Just think of it, scale 1 to 10. How much would that help you improve your business right now? Again, if you want my one-page 5 deeper gaps and fixes checklist, direct message me depth. Or if you want a second set of eyes to look at your current situation and talk about it, book that 30-minute proactive cash flow and profit strategy session. Not only will we don't even have to look at your current situation, we can do that value builder score together. And again, you'll get a report card and you'll get advice on what to fix all in 30 minutes. We'll review what's missing and what you can fix in 30 days in this session. What would steady cash flow mean to you? If you're ready for real-time support that spots those issues early, that is my top level service for you. Get clarity, steady cash, and more life outside work. We'll talk about it. Oh, and one more thing. You may be in a good situation, but as we all know, business owners know other business owners and they talk. Do you know of anybody else that you've talked to that's dealing with issues that I could help, that could use my top level service, or just even that 30-minute phone call to help them out? Send them my way, or send them the link to part 1 and part 2. And then after they watch it, they can direct message me clarity and I'll send them the checklist. I hope that you found both of these parts very helpful. I've enjoyed giving them to you. And again, have a great weekend. And I'll have a new topic for you to discuss next week that hopefully resonates with you. Again, see you next week. And again, make sure that you have that understanding between your advisor and yourself, what is actually done and what they are expecting compared to what you are expecting. Have a great week, everybody.